Pullback trading is a popular strategy among traders, among investors, and all it does is take advantage of temporary price reversals in a trend with the expectation that that trend is going to resume. By buying low and selling high, which is the overall concept, a pullback strategy looks to maximize the profits while minimizing risk by setting the stop loss just below the reversal point and then looking for multiple risk winners. So if you're looking to trade pullbacks, this is your video. So the first step, we got to identify the trend. A trend is just the overall direction that the stock price is moving, either upwards or downwards, even sideways in a range. So a trader who can identify the prevailing trend, those are the ones that are better positioned to take advantage of pullback opportunities. And there's several different ways you can identify a trend. And you can use tools like moving averages, trend lines, and chart patterns. So moving average, just a common tool used to identify trends. Just an average of the stock's price over a specific period, and it just helps smooth out the price fluctuations. So a pullback strategy often uses a combination of a shorter term moving average like the 50 and a longer term one like the 200. So when the stock price is above the averages, it indicates an uptrend. Below the averages indicates a downtrend. We can use trend lines. And this is just another way to identify the direction. These are diagonal lines drawn on a chart, just connecting two or more price points. So when the trend line is sloping upwards, just indicates an uptrend. When it's going down, it means a downtrend. So as a trader, you want to see strong trend line validation because you want to see the price action bouncing from or pretty close to the line that confirms that that trend is in place. This is known as a healthy trend line pullback, and that in itself can be a trading strategy. Chart patterns, another way to identify trends. You look at the head and shoulders, double tops, double bottoms, and these patterns can provide clues about the trend and potential pullback opportunities. So a head and shoulders pattern, for example, that indicates a potential trend reversal from an uptrend to a new trend direction to the downside. An ascending triangle, and this is one of the most popular consolidation patterns we have. We get to see higher swing lows with a price breakout to the upside. That's another confirmation of a strong bullish trend. So how do you identify the pullbacks? A pullback, again, is just a temporary reversal when the price moves against that prevailing trend. And these can be caused by a lot of different factors: market volatility, news events, or profit taking, or even short positions being put in a bull trend. So to identify a pullback, look for a stock or whatever you're trading that's moving against the overall trend, but is likely to continue in the overall direction. So let's say a stock price has fallen. Well, it could indicate a pullback in an uptrend. On the other hand, if the stock price has risen sharply in a short amount of time, it could indicate a pullback in a downtrend. We don't know. Right? So it's really important that you know what trend you are involved in. And not all pullbacks are equal. You want to look for some sort of confirmation before entering a trade. You can do this by analyzing volume. Is price coming into a support and resistance level, or any other indicator? So for example, if trading volume is low during a pullback, that's good. That could indicate a lack of conviction against bearish traders or people selling out. It just means that those holding longs are a little bit stronger here. We want to see less trading activity when the pullback happens. So any sign of momentum against our trend, that's a red flag. Most pullbacks that are successfully reversed are the ones that have low interest going against the trend. On this chart here, we see that price broke support with conviction. We don't need to see volume to know that these are the ones that show more interest to the downside, and a buy trade could be a tough one to sit through. So when there's momentum against the trend, we actually may be seeing several pullbacks. That's called a complex correction. But then again, we could also see a trading range occur. We don't know. It's also important to note that not all price reversals are pullbacks. Some reversals are a complete trend reversal. So when a level is broken, we're talking about support and resistance, breakout pullbacks will commonly happen. So this is when the stock moves over that level and then enters a correction wave back to the origin of the break. Now, this can be a small pullback or a deep pullback into the zone that broke out. Now, traders can use chart analysis to differentiate between a pullback and a trend reversal. So example here is if that stock price breaks through a key support level, it could indicate a trend reversal. You want to see the breakout pullback occur, and that may confirm a new direction to the downside. So if price breaks a former swing low, this could also indicate a trend change. So after identifying the pullback, the next step is confirm that it's a pullback, not a reversal. And this step is going to help ensure that the trend is likely to continue in the direction you expect. That's going to reduce the risk of you entering a trade based on a false signal. So to confirm a pullback, you can look for specific indicators that provide confirmation of the price movement. One indicator could be trading volume. A drop in trading volume during a pullback could indicate a lack of conviction. We can confirm looking at a pullback. Seeing an increase in trading volume during the pullback, it's a red flag. Another indicator we can use is just a break of a key technical level. So if a stock is in an uptrend, pulls back to support, a break of that support level could indicate a trend reversal rather than a pullback. So here with this chart, the pullback occurs with momentum, and then we get a slight uptick in volume activity. A price is sitting on support, and a break of this level could indicate a change in price direction. Now, if the stock bounces off this level and continues the uptrend, we can be fairly confident that we're looking at price movements that indicates a reversal and a continuation. If we use a 310 oscillator, we can see some momentum is returning to the upside by looking at a flip of the fast line. This is also a trade entry technique I like to use. Another pullback methods includes Fibonacci retracements like the 38.2 or the 68%. The 50% level, not an actual level, but it's a common retracement value in the markets. So now we've confirmed the pullback. Now we need a buying opportunity. So this step requires patience, requires discipline, because you gotta wait for that right buying opportunity. Traders, you want to look for an entry trigger, like a break of the reversal candle long or a break of a resistance price level that shows continuation, right? Short-term moving average, like the 5 or 10 EMA combo, can be used when price breaks and closes above the averages. You want to also make sure that you consider your risk tolerance and your goals when you look for a buying opportunity. You got to have a clear understanding of the risks and the rewards before entering a buy order. Now we need a stop loss. One of the most important things you can do in trade pullbacks. It's going to limit your risk. It's going to help manage risk. It's going to help manage losses. So stop loss, just an instruction to sell your stock automatically when the stock price drops to a level. And by placing this order, you can limit your losses in case that trade doesn't go as expected. So to place a stop loss, just determine the appropriate level based on your tolerance of risk, capital available. The stop loss level should be set at a price below market turning points, not too close to avoid being triggered though by short-term price fluctuations. You can use tools like support and resistance levels, trend lines, and the ATR indicator to help you determine an appropriate stop loss level. Now, it's important that you know that these orders don't guarantee that you're going to exit the trade at the desired price. In a fast-moving market or a market with low liquidity, that stock price can gap below that level, could result in a larger loss than you expected. So always consider the potential for slippage. That's just the difference between the expected price of the order to sell and the actual price at which it gets executed. We can use a trailing stop technique. You want to monitor the trade, adjust the stops if necessary. So if that stock is continuing to move in the desired direction, you want to adjust your stop loss level to lock in the profits, but also reduce your risk. When you use that trailing stop, just be prepared to watch that price retrace, your profits taken away until that trade gets stopped out. So the stock price moves against the trade. You got to remember, do not move your stop further from price. Profit targets, you got to set them. They got to be realistic. To set a profit target, use previous resistance levels for buys, measured moves, chart patterns. So if that stock pulled back to a support level and bounced off it, you can set a profit target at the next resistance level. So here, traders can use a measured move profit target, A to B equals C to D. They entered at C. You would look to exit at D. Traders should also consider the overall market conditions and the news that may be related to the stock or the company. Positive news can increase the potential for the stock to continue. Negative news, market might decrease. You never know. So if you're a long-term trader during weak market action and it begins to stall, you may be a little bit more conservative in your profit target. So let's say you're long an instrument, price forms a trading range. You might tighten your stop to just under that range, thereby making the low of the range your target. Finally, got to monitor it. Requires discipline, requires patience, takes time for that stock price to move in the direction. You should monitor that price using averages, support resistance levels, other tools. You can use price alerts to receive notifications when the stock price reaches a specific level that you want. When you monitor the price, you get to adjust your stop loss and your profit targets. Also, again, consider the overall conditions of the market when you're monitoring the trade. We have different things that can move the market. And then we got to exit. It's the final step. Exit the trade once you reach your profit target, or if you get stopped out. After exiting the trade, you got to evaluate that trade. Determine what you could have done better or what you could do differently for future trades. And this evaluation should review the analysis tools that you use, the stop loss, the targets, and just the market conditions and how you trade. And this review here that we've got here for you can help you identify any mistakes that you may have made. If you want to pause this video and write these down, that'd be a good idea. And you can use these answers to make adjustments to your strategy for trades in the future. And this may include different technical analysis tools, adjusting your stop loss and your targets a little bit differently. So at the end of the day, trading pullbacks in stocks can be profitable when you do it right. These steps here to help you identify price direction, confirm your pullback, wait for a buying opportunity, set your stop loss and your profit targets. Monitor that trade, exit that trade, all important things to do. And remember, consider the overall market conditions and any renews that might be related. So we talked a bit about indicators. I have this free PDF guide. It's about the ultimate guide to price pattern trading. It's totally free. Make sure you download it. The link is below in the description